All right, welcome back to another YouTube video, guys. I know it's been a long time. I got busy and the market started going down. You know how that goes. But we're back now. I'm showing you guys I'm on my Discord right now. You guys ready? I know it's not a lot more, or I think it might be even less than the last video I recorded, but it's been a pretty bumpy journey these last couple months. I mean, you look at the year to date, we're finally back to being green, but man, it has been rough year to date. January, we started off at 58, went all the way up to 66. Now we're finally back in the 60s, got stuck in the 50s for a long time. If you guys look at my all-time, last year October, this account was at 77,480, almost 75,000. It went down all the way to 49. Yeah, I know. I mean, we're talking about almost a $30,000 difference here. But guess what? Your boy's been here. I've been buying. I've been selling cash secured puts. But really, sometimes in a rough market, you can't do anything about it. The market's going to go down. There's going to be wars in the Middle East all the time. And people get scared and they sell. There's a lot of manipulation that we've seen recently. But it's part of the game. It's part of the game. That's why we play long term. That's why at the end of the day, we're looking 5 to 10 years out. We're not looking for this year to make money. We're looking in the next 5 to 10 years. How am I going to grow this portfolio? How am I going to get this $60,000 portfolio to 100,000, then to 200,000, then to 5, then to $1 million? I mean, that's the idea that you guys have to get into your heads, right? We're not looking to make quick money. We're looking to make long-term wealth. So now, with that being said, I want to walk you guys through some of the holdings that I have in this portfolio. This is my public account. This is the one portfolio that I want to share with everyone, right? So let's just go ahead and start here with my Celsius cash secured put. The reason I've been selling cash secured puts on Celsius is because, so let's take a quick look at Celsius stock. In the last 3 months, this thing has absolutely shit the bed. I mean, 35% down for Celsius. This company is one of the best energy drink companies available out there right now. It's really popular. If you know energy drinks, you know Celsius Energy, and they're actually starting to expand internationally. So for them to be down 35% the last few months, it's just, it's a joke, really, it's a joke. But if you look at my cash secured put, it's actually down right now, right? It's down, what, $86, 10%, nothing crazy. But the reason that I'm selling puts on Celsius, and as you see here, it's going to expire in a couple days. But I want Celsius. I want the stock. So 35.30 is what I would be getting at. So right now, if it were to be expired, I would get 100 shares of Celsius at this price. And I'll take it all day because, I mean, you look at the chart of Celsius. I mean, like I said, in the last 3 months, it's down 35%, guys. When you see discounts like this, a stock that was at $65 in October of last year, 6 months ago, and now it's half the price, that's a discount. And this is when you should start buying. This is when you start loading the boat. I mean, I'll show you guys the volatility index. So, I mean, you look at the fear and greed index right here, right? Let's check it out. Right now, it's in neutral. The market's been coming back. But guys, when it is in extreme fear, you want to be buying. So, I mean, thank God, we've seen the last couple. I mean, you look at just this week alone. Like, I'll show you my account just this last week. We went from, it's not right, wait for it to load. We were up almost 15%, 14.24% on just this week. I mean, we started the week off at the low 50s, and now we're in the 60s. So, that's what happens when you continue to buy and you have confidence in your positions, right? So Celsius, I'm hoping I can get another 100 shares at that price. Let me show you guys this ELF Energy. So this is actually a covered call, right? So on ELF, I recently just purchased 100 shares, right? I saw that it was really low. ELF Beauty is another one of those stocks where, in the last 3 months, it's just been getting absolutely brutalized, 21% down. But I mean, come on now. Like, ELF Beauty is a worldwide, makeup and beauty products brand. And they recently bought Rhode. They're buying, these good companies that have a lot of, a big following. So long term, this company is bound to go higher. And, I want to show you guys something in the last year. I showed you October. Look at Celsius in October, $145. And now we're looking at it at $68. That's almost half. That's more than half. I mean, if you look at the difference, 146 to 68, and it got all the way down to $59. That's a joke, guys. So when you see things like this, honestly, like, you could sell cash secured puts or you could just buy the shares. And, I decided to buy the shares. I bought these April 9th. It's April 14th. So in 5 days, I've made $454 just off buying these shares, and I'm gonna hold them long term. That's my plan, is to hold them long term because it is such a good company, and I would be happy to hold Elf Beauty for the next 6 to 12, if not 24 to like 3 years. 24 months. But I also sold a covered call on this. Why? Because the market's been moving up for the last week and a half or so. So I wouldn't be surprised if we do see a move downward. But yeah, it's just gonna cover me for 165 bucks, right? If it doesn't move downward in the next 3 days, then I get 165 bucks. If it does move downward, if it doesn't move downward, then I end up selling my shares. If it does go up to this 70.65 mark, and if it does move downward, then I get paid 165 bucks. So it's a win-win because I'll take the profit, $70 after I bought it for 65. What did I buy it for? $64. I bought it for $64.40, right? It's already at 68. If we see it at 70, I'll sell it. That's a quick $600 in a week, So, that's another strategy. Mostly, these two are just cash secured puts and then selling a covered call. So this is what I mean by selling options can be really powerful, right? So we're selling this one, we're selling this one. This is another sell. This is a covered call that I have on NVIDIA. Right now, it's down 12%. But if NVIDIA hits 195.40, which it already has, I'm going to be getting out of NVIDIA. And this is one that I've actually had for a long, long time, NVIDIA. I bought this, it doesn't tell me when I bought it, but I have 100 shares, and I got in at 120. I don't know when that was. I think it was March of last year. But yeah, up $7,500. This is what I mean, guys. Long-term holds are your friend. And NVIDIA I've had for a long time. If we go through some of the history that I have with NVIDIA, it's just me selling covered calls and then buying the contract back. Look, I sold here. I bought it back $50. This is in the same day. Same thing over here. Sold it, bought it back one day after, made a quick 70 bucks. It's just, it's the same thing happening every time. Sometimes I have to roll it out. But let me see if I can find when I actually bought these. I believe it was March. As you can see, guys, it's just me constantly making money off this every day. 50 bucks, 80 bucks, 100 bucks, whatever it is, If I can make an extra $100 a day, I'm not complaining. It's easy money, guys. Easy money at that point. Let me see if I can find when I bought the stock. 12,800. So I bought it in March of last year. I got a sign from a cash secured put. So from March to now, it's been over a year. That means these are long-term gains now. So I'm happy to get out of NVIDIA, I think AMD is the one to be getting into, AMD has good growth, and we're going to see it start reporting great earnings. Earnings week is coming up, guys. That means the market's going to do really good, hopefully. Next up, we have SoFi. So this is actually a loser for me. This is a call that I had on SoFi, 275. Did not perform well at all. Don't know why I'm still holding it. I'll probably get rid of it. But SoFi's been getting absolutely just destroyed, guys. But guess what? I have 600 shares. I have been collecting because long term, this company is going to do great, guys. Fintech, as far as fintech goes, there isn't really a much better opportunity out there than SoFi. And for it to be at 18 bucks right now, come on now. That's a joke. That's literally a joke. If we look at the 1 year, let's look at the year to date, down 33%. We kind of see this pattern all throughout the market. It's been rough, and that's part of the game, is sometimes it gets rough. But we've seen SoFi at $32. My average cost is $17.30. So, and I have 600 shares, guys. That means every dollar it moves, I make $600. It's at $17.93. I'm at $17.30. Imagine if it goes back to $32. We're going to be making stupid money on this, guys. So, I would get in. SoFi is on the cheaper side, so I would definitely get in those. I have 2 Microsoft Leaps. Microsoft has just been getting absolutely destroyed. Unfortunately, this Leap is just getting destroyed too, man. Leaps are dangerous. They are probably the most dangerous strategy that I play. But, I'll show you guys Microsoft in the last year to date. Down 19%. Microsoft from 484 to 392. That's a big dip. So, I definitely wasn't expecting that. Microsoft is usually one of the stronger Mag 7, big tech stocks. But for it to go from 542 all the way down to Is this 360, 356, guys? I mean, that's a massive dip. And if you see a dip like that, sometimes it's a good time to get in there, and it could be a good buying opportunity. However, I can't say that I would recommend Microsoft as much as I would like AMD. AMD, this is my baby right here. Look at this, guys. So leaps are dangerous. I'm gonna tell you that now. You know, I personally wouldn't recommend buying leaps for anyone who is not ready to risk that money, because it can all disappear like that. If the stock dips, if some bad news comes out, all of that can disappear, right? So AMD right now is doing great. I mean, you look at it in the last week, it's on an insane run. It's up $36 on the last week. So finally, we get to see the benefits of the sleep option. I'm up almost $10,300 on that one. It's been a winner for me, guys. I'm up 2,300 on that one just in the last week. You know, from April 8th. But yeah, leaps can be powerful or they can really hurt you, you know. So it's all about you and your luck, and understanding when a stock is undervalued and it's time to get in with a leap option. Excuse me. Next thing I want to go over is the stocks that I currently own. I showed you guys the 100 Nvidia shares that I have and how I'm okay to get out of those. I also have 600 shares of SoFi. Showed you those. 1730 average. It's honestly great. Palantir, I recently got assigned for a cash secured put, and then I sold out, made a quick $1,600 profit. There's just a couple shares left. Hims had a big issue where them and the company that they were working with, I think it was Novo Nordisk or something, but basically they had a lawsuit going, and recently they figured it out where they decided, you know, this lawsuit is just going to bring us both down. Instead, let's find a way to work together, and let's try to improve both of our companies. So, I mean, if you look at Hims in the last 3 months, guys, 35%. Like I said, it's the same pattern that we keep seeing over and over. The stock went down all the way to, what, $14, $14.52. That was a snag. I was able to get in there at $22. I got in, like, I think on the way down somewhere around here. You know, it wasn't at the very top, but it wasn't on the very bottom. That's kind of how the game is going to be. You're not going to get it at the very bottom every time. But yeah, I'm ready to hold this one long term. Really, it's only 3% of my portfolio. So, you know, you got to understand risk, like portfolio diversity to bring down your risk. But Hims long term is a great company. You know, having these certain drugs or medications delivered to your house is a great idea, especially because some people, you know, they are not as they don't want to go out into the public, and they don't want to see people, and they're kind of embarrassed of the drug that they have. Next up, we have Celsius Energy. Celsius is, I talked to you guys about Celsius, guys, right? So, I mean, right now we're down on it. This is the shares that I have. I have $44 average. This is from a cash secured put that I got assigned earlier. But I have another one coming in. Hopefully that can bring my average price down to in the 30s somewhere, which would be great for Celsius. Finally, I have e.l.f. Beauty. I think I showed you guys this one already, but yeah, just a couple $100 on that one already. And then Nike is another one that I recently bought. I bought 100 shares. And I bought it at 44.40, so I mean it's barely down. 44.06, sorry. But Nike is another great company that you can hold long term. You know, we constantly are seeing this same pattern where the market is down 35% of what it was at some point. You know what that means is you're getting a great buying opportunity. So make sure you guys are not missing out on this buying opportunity. I mean, you know, you see the market fall, people get scared. Do not be scared, because that means you're getting discounts on the whole market. I mean, think about it. You go into a store, would you rather pay 100% or would you rather get a 33.62% discount? I know what I would do. And, you know, as you can see, I'm very confident. I'm buying a lot. And, yeah, let's make some money over these next few months. Thanks for joining, guys.